Now, the hot take on some of the 76 recommendations that will reshape the trillion-dollar financial world. Let's take a look in detail at those that will hit the banks, their shareholders and finance workers. Joining me is ABC business editor Ian Verrender and Daniel Ziffer, who covered the Commission from day one for the business. Both were in the lockup with me, spending some quality time with this tome from Commissioner Hayne. It's been a long time coming. The stakes were high. We'll take a look through some of the first of the recommendations, and one of the biggest is the mortgage broker recommendations. The first one says the borrower, not the lender, should pay the mortgage broker a fee for acting in connection with home lending. Ian, this is one of the several recommendations that will turn the mortgage broking industry on its head, isn't it?
Yeah, for sure. But you'd have to ask, why was it any other way? I mean, why is it that these people could charge so much money in commissions that were never really disclosed, and why the customer had no idea about this and, thought that they were getting a good deal when in fact clearly from the outcome of the commission they weren't.
There are plenty of people who think they are getting a good deal from their broker, but as we've heard from several reports, including the landmark ASIC report from 2 years ago, it showed that loans from brokers are generally larger, take longer to pay off and are generally higher cost than others. One of the other key recommendations for mortgage brokers is that they will now have to, if it's adopted by government, have to have a best interest test. Now, this is something that's been attached to financial advisors for some time. This is another significant step which will inevitably, like we saw with financial advisors, see brokers leave the industry, do you think?
I think so, yeah. I mean, it's going to be an enormous pain through that industry. But clearly the interests of brokers and their clients weren't aligned. As you just said, a broker had as their main interest to sell you the biggest possible loan at the best deal for them. And, you'd have to, what other industry allows its practitioners to operate in other than the client's interest? Lawyers, doctors, name another profession where this takes place.
And still on the brokers, Dan, we've seen that the government hasn't quite recommended this as yet, but they may in time. And of course, we may have a new government in a couple of months who may adopt it, that the borrower, not the lender, should pay a fee, that the commission structure should be replaced by fees, and that should be paid by the customer, not the bank, as it is now. This is something that, again, we've seen for other parts of the financial industry.
So we heard a lot of evidence on this particular topic from other jurisdictions around the world. In other places, customers pay this fee. Doesn't matter if they go through a broker, doesn't matter if they go through a bank. So they're trying not to kill off the broking channel, and there are multiple listed companies that exist entirely on broking. But they're trying to make it so that customers pay a fee for a service. They're moving away from the commission model. And as Ian said, it seems crazy that we have to say this out loud, but brokers have to work in the interest of their customers. That will be law.
And on that listed front, there will be significant issues for listed companies like Mortgage Choice and Yellow Brick Road. Taking a look at Mortgage Choice alone, in FY18, in its full-year result, $92 million of its revenue. That was a large part of its revenue was made up in trailing commissions. $70 million was in upfront commissions. So some significant changes for them there. Moving on from brokers, having a look at amending the banking code of conduct and other industry codes that we've seen. No longer will these be motherhood statements.
No. Well, I mean, it's always been a bit of a joke, really, isn't it? The banking industry comes up with a new code of conduct. Well, what does it mean? It's got no weight of law behind it. So what the Royal Commissioner has said is you can have all the codes of conduct that you want, but if you agree with it and then ASIC ratifies it, then you have to stick with it. Otherwise, you'll be prosecuted. So it actually adds that weight of law behind this code of conduct, and I think that's a very positive move.
Dan, you spent some time during the Royal Commission looking in particular at the issues associated with rural lending and particularly on-farm lending. There was quite a lot in the Royal Commission report in regards to distressed agricultural loans and how banks should deal with those going forward.
So in some cases, the banks have moved already. They've felt the political heat, and they have, for example, no longer putting extra interest where loans in drought-affected areas are already in default or in trouble. But this will make them go further. So many of the stories from rural communities, and particularly from Australians in the farming sector, powered this commission into being. They were the majority of the people who would turn up to the sessions. They were the ones taking on the bankers outside, going to AGMs and asking questions. So some really substantial changes that won't fix all the problems, but for example, by making mediation compulsory, they're going to force the banks to really examine their own practices when they deal with these very large businesses that are subject to commodity prices and weather well beyond the impact of how well the farmer runs the business. So it's going to force them to take a more long-term view of these big issues.
They've also included in that the issue of fire sales, and this has been a real bugbear for a lot of farmers. You know, they get into trouble and then suddenly they find the valuation of their property doesn't actually account to the market value. The bank sells it off for virtually nothing, retrieves its own money, and then the farmer is left with nothing at all.
Very quickly, the BEAR, which is the Banker Executive Accountability Regime. Finally, some backsides will be on the line personally for the creation of products and also the remediation if those products turn out to be faulty.
Yeah. Well, I mean, the big problem that any regulators had in the past is that no one actually takes personal responsibility for this. So who do you sue? And you'd launch action against an organisation. No one's taking any responsibility. There are no names on the line. So if this is implemented, you'll find that there's a lot of nervous executives there going, really, should I sign this? Let's check it through and make sure there are no problems. I think it's a crucial element.
Very quickly, National Australia Bank Chairman Ken Henry and the CEO Andrew Thorburn were absolutely savaged in this report. They are the two named people who really copped it. Are their positions tenable?
You wouldn't think so, would you? Not after what was said today. And a lot of critics have said, look, you've only had a go at them, Mr. Hayne, because they were bit rude during the course of the Royal Commission, the hearings. But, you know, change starts from the top. And so the Commissioner has said, if you're going to treat the senior counsel in this manner, clearly you don't hold any of these principles in high regard. So what chance has any reform got to take place within your organisation?
Ian Verrender, Dan Ziffer, thank you so much for your time.